Hi guys, welcome to my YouTube channel. This is my first video and I hope it gives a lot of value to those interested in getting to know the basics on starting Forex without much hassle. This video will be in parts. So this is the part 1. I will start with what Forex is, who can trade Forex, when do we trade, the market sections, and what is traded in Forex. Going over to what Forex is. In simpler terms, it is the global financial market that allows one to trade currencies. The foreign exchange market, which is usually known as Forex or FX, is the largest financial market in the world. Now that we know what Forex is, who are those that trade Forex? It has a diverse mix of participants such as central banks, financial institutions, corporations, hedge funds, and we the individual traders. Due to the wide range of market participants, exchange rates change by the second, so the market is constantly in flux with about $7.5 trillion a day trade volume. The next is, when do we trade this Forex market? The Forex market is open 24 hours a day and 5 days a week. This is from Sunday, open of Asia section, to Friday, close of New York section. The statement that it is always open 24 hours a day doesn't mean it is active the entire day. This is because there are what we call sections in the market, and different sections bring about different volume of market participants, in which you experience a low to relatively no volume or a high volume in trading, depending on the section. This brings us to market sections. What are the market sections we have in this Forex market? There are 4 major market sections, which consist of the Sydney section, the Tokyo section, the London and the New York section. For education purpose, I included the Sydney section, but it has 3 peak trading sections, which are the Tokyo, the London and the New York sections. You can make money trading when the market moves up, and you can make money trading when the market moves down. This is the beauty of Forex trading. But you have a really difficult time trying to make money when the market doesn't move at all. Some traders like me decide to trade 1 or 2 of these trading sections rather than attempt to trade the market 24 hours a day, because we're not looking to leave a 9 to 5 job to start a 24-hour job. Going over to the open and close of these sections, each of these sections lasts for 9 hours. The Sydney opens 10 p.m. GMT and closes 7 a.m. GMT. The Tokyo opens 12 a.m. GMT and closes 9 a.m. GMT. The London opens 8 a.m. GMT and closes 5 p.m. GMT, while the New York opens 1 p.m. GMT and closes 10 p.m. GMT. During the open and close of this section, some of these sections will overlap. That doesn't mean that there's a problem. It basically means that there'll be increased market participants during those overlaps. So now, what is traded in this Forex? Since we know the sections traded, we know trade the Forex, so what is traded? The answer basically is money, because you're not buying anything physical. Forex trading can be confusing, so we'll use a simple analogy to help explain. Think of buying a currency as buying a share in a particular country, kind of like buying a share in a company. The price of the currency is usually a direct reflection of the market's opinion on the current and future health of each respective country's economy. Let me give an example. When you buy the Japanese yen, you're basically buying a share in the Japanese economy. So you are betting that the Japanese economy is doing well and will even get better as time goes. Once you sell those shares back to the market, hopefully you end up with a profit. That is, if the economy of the Japanese goes well. In general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to their other economies. While the core of Forex trading is currency pairs, there are a few other instruments and assets that are often traded within Forex platforms or alongside Forex. I'll be grouping these instrument and assets into 5, which are the commodities, the indices, the cryptocurrencies, the bonds and interest rate products, and the CFDs on stocks. Going over to the commodities, examples are gold, silver, and oil. The indices, we have the US 30 and NAS 100. In the cryptocurrencies, we have the BTC USD, which you guys already know, and the Ethereum USD. The bonds and interest rate products. We have the government bonds. Example of this is the US 10-year Treasury yields. Then finally, the CFDs on stocks. Examples are the Apple, the Tesla, and the Amazon. For educational purpose, we'll be focusing on the currency, although I trade gold, which is a commodity. We'll be coming to that much later. Focusing on the currencies, there are 8 major currencies, which are the Canadian dollar, the pound, the euro, Japanese yen, the Australian dollar, the Swiss francs, the New Zealand dollar, and United States dollar. I listed them in their symbols to get you accustomed to saying it. These currency symbols always have 3 letters, where the first 2 letters identify the name of the country, and the third letter identifies the name of that country's currency, which is usually the first letter of the currency's name. These 3 letters are known as ISO 4217 currency codes, and some of these examples, for clarification and much better understanding, are NZD. NZ stands for New Zealand, YD stands for dollar, GBP. GB stands for Great Britain, YP stands for pound, USD. US stands for United States, YD stands for dollar. This brings us to the end of the part 1 of this video. Thanks for watching, guys. Remember to subscribe, like, comment, share, and don't forget to turn on your post notification. I'll see you in my next video.